Well, good morning, everyone. Welcome to our Friday morning trading room. And given that it's Friday, we got our Rabbit Hole Friday going on today. This is the day that we kind of look at different trading tools and trading methods. And I've got a real treat for you here today. I got Zach Hurwitz with us today, and Zach is Mr. VWAP.
What an introduction. Thank you so much,
Yeah.
Eric.
Sure. So Zach, tell us a little bit about yourself. You're an honest to goodness trader. You're not one of these guys just reaching from an ivory tower. You're down in the ditches.
Well, if you call Cincinnati, Ohio being deep in the trenches, then yes, I've been here for 11 years. I've actually been an independent equities trader since graduating from Tufts University with a degree in economics back in 2008. So that was the start of my market timing career. I'm joking. That was a terrible time to graduate, of course. And no, I became a trader. I don't want to say part out of necessity, but the opportunities for someone with a degree in economics at that time were a little more limited given the market collapse. And honestly, it was a fascinating time to be able to participate in something I both deeply understood and cared about, and that was happening right in front of me. I told people it was like the Super Bowl every day for a year and a half.
Yeah,
You know,
that's no joke. It was.
yeah.
You'd live or die by the day.
Absolutely. I remember telling people about, the chaotic stories of September, October of that year. I could go into anecdotes for you guys, but I'll tell you one quick one. There was a big storm actually briefly that week of September 14th, 15th on through that week here in Cincinnati. And I didn't have power at the place I was staying. So I literally went to my friend's, his house. He was out of town. And I'm not joking here. I used his wireless internet while sitting outside on his porch, holding an umbrella over a laptop. I'm not kidding here, guys. Trading my account in the first maybe 4 or 5 months I'd been a trader as the market's, crapping itself. Lehman's going
Wow.
under, and I'm trying to hold an umbrella over my Wi-Fi laptop. I was like, this doesn't feel like how professional traders really approach it. They probably have a little better settled, a little better infrastructure, but that's how an independent trader's life is, especially early on. Before I, really made the commitment, got myself set up. That was just me and a laptop. So,
Yeah,
Eric, do you mind?
it's supposed to be a sandy beach.
Right? Yeah, exactly. I was supposed to be in like Bogota, Colombia. It's a nice coffee in one hand and perfect internet on my new laptop in the
Yeah,
other.
there you go.
I was going to ask Eric, just remind me, how did you get started trading? Was it anything as chaotic or insane as that, or did you get started during a more stable time?
Oh, I took up trading back in the 1900s. Back in 1995, I started trading, and I'm pretty much a self-taught trader. Uh, I've done the courses and the education and whatnot, but really it's the school of hard knocks. So, over the years, invested a lot, found out what worked, what didn't work, and had my mentors along the way. But yeah,
Mhm.
eventually got some traction, and yeah, here I am today.
Certainly. When you say in like an investment, I always think some people pay the tuition. Not everyone attends class. Do you know what I'm saying? Everybody
Mm,
pays the money, but not everyone gets something out of it. And
yeah,
so to have taken those licks and kept on ticking, people used to give me a compliment when I was younger. They'd say, "Oh, you're a young, hotshot trader. That's so crazy that you're able to do that." I say, "No, no, no. Longevity is what you need to be impressed by. Not that I'm
yeah,
young and taking risk. It's pretty easy to do. It's like if I'm still a trader in 5 years and you talk to me again, you say, "How's it going?" And I say, "It's going great." That's when you should be impressed because sustainability is what this
yeah.
business is really about.
Well, that's right. And here you are 10 years later. So you've kind of become the VWAP guy. And so why don't you take a moment, explain what VWAP is to people, and if you want, let's see, I gotta give you the mouse, I think,
Sure,
or
sure.
maybe you can take it yourself. See if you can take control and you can do a screen share, or here. I
Sure,
think I
sure.
got
No, I'm getting it
it.
set up right now. I think I see it as well. I'm looking on the panel. Perfect. All right. So here's what I'll do, guys, if it's all right with you. I'll do a little bit of just a verbal intro. So I know you guys are all focused probably on watching the open. That's perfectly fine. We'll pull up some charts here in a few minutes and take a look at something. My platform, I should warn you guys, is not NinjaTrader. Although, great news, VWAP is not platform specific. VWAP is just a concept, an idea, a calculation, and it is consistent across platforms. So there are ways of finding this if you guys are interested in looking further into it. And obviously, you can shoot either Eric or myself. I'll give my contact information towards the end. You can shoot us a question if you have one. We'd be happy to field it. So I think we'll start. Move this out of the way so we'll get ready for when the screen share begins. I think we'll start with the concept of moving averages. I almost asked, is everybody here familiar with moving averages? But I feel like that is an absolutely accepted question, right? Everyone has
It
at least seen a moving average or experienced a moving average before. And it's usually where traders start. I kind of feel like it's where traders start for good reason. It's a way of simplifying otherwise really complicated information and distilling it down into something that's a little more digestible. And it kind of gives you a reference point, if you will, a way of figuring out where you are in the market's, let's say, context. So most traders aren't really thinking about moving averages that way. They don't use the word context. They think support and resistance. Where do I find a bounce point? How do I get into a trade? So the two observations I have there are traders could be using it as a reference point or should be using it as a reference point, but often end up using it as support and resistance. So what if we kind of merged these two ideas? And by the way, I should just clarify, Eric, jump in anytime. I'm going to sound like I'm rambling or lecturing. Like, don't worry, it should be a
Yeah,
conversation.
yeah. No,
So
no.
obviously,
I will. Just so you know, I don't know if you're doing your screen share yet.
no, no, I'm not
No.
just yet.
Okay. Good.
Totally fine. I'll tell you what, here's what I'll do. Bear with me just 1 second, guys. What I'm going to do is I'm actually going to close a couple other chat programs so that they're not going to bother us. We'll have all those notifications popping up in the lower right-hand corner. You'll see people screaming at me, asking questions. Right, there we go. So here's what I'll do. I'll get the screen share started now, if possible. And I've got the NQ pulled up. Tell me, what do you see right now? Do you see the chart I've got pulled up?
Yeah. I've got your
Awesome.
chart with your
Quite a bit of colors, probably,
quite
right?
a bit of color. Yep.
All
All
right,
right.
so let's do this. Here's what I'm going to do, guys. Bear with me 1 second. I'm going to edit the studies very briefly. What I'm doing here is I'm just going to simplify our view. And the reason we're doing that is that'll give us a little bit less to worry about, make it a little bit easier to focus. So one last thing I'll pull up is I'm going to get my drawing application. Move this off to the side, and there we are. The first thing you'll probably notice about a volume weighted average price when compared to a moving average is that a moving average tends to be a lot more responsive, maybe is a positive way of saying it. If I were trying to talk some smack about a moving average, I would say that it's all over the place. It's too responsive almost. Now that might be an issue of some of the settings with the moving average, but a volume weighted average price really has no settings. One of the beautiful parts of a VWAP is that it takes actually a lot of the control away from the trader. And I'm going to harken back to something that Adam Halpern told me many years ago. He said, people are tinkerers even when they shouldn't be. And if we can remove some of the unnecessary choice, but keep some of the control in the trader's hands, that's the best of both worlds. And that's always echoed in the back of my mind. If we can take away the meaningless choices and give the user kind of the focus on what should be there,
Hmm.
makes so much more sense, right?
Well, and it's so true because I
Mhm.
get, and I'm sure you get these questions all the time too.
Mhm.
People asking, "Hey, Eric, what's the best setting for my stochastic? What's the best
Oh,
setting
of
for
course.
Bollingers or moving averages?" And I keep going back to people. If it was as easy as dialing into a 13 period stochastic instead of a 14 period, trading wouldn't be difficult. So the VWAP, it,
Absolutely.
it takes that out then. It just focuses entirely on the volume and takes the user parameter away from you.
That's right. And because there's no settings, no time frames, no tweaking involved, it's nice that we know we're looking at the same broad benchmark or indicator that likely other sizable traders are. So the kind of internal debate you might have had, you know, do other guys watch the 200 moving average? Like I kind of assume they do, but
Hmm.
I don't know if they do, right? We
Yeah,
implicitly, we have to believe that they do. We trust it's the 200 daily moving average, right?
sure.
Everybody talks about it. But what about the 200 hourly? Or what about the 50 15-minute? What about the 34 on a 5 minute? I mean, there are all sorts of unique recipes for moving averages that may or may not work. And I just want to be clear, I'm not saying there's no applicability. I'm saying finding the right applicability is really hard. And I always tell people it's kind of like trying to solve a combination lock if you don't know the combination. You can
And
try
it
every combination, but you might go crazy first. Sorry, go ahead,
and
Eric.
and it changes through the year as well, because just before we opened the room here, we were discussing how, the market environment changes through the seasons. As we're coming into the summertime, the market's likely to get flatter. Well, all of a sudden, you may have been watching, like you said, a 200 period moving average. That may not be as predictable as it would be during the winter months, when the markets tend to be a
Mm-hmm.
little bit more volatile.
What you're describing is almost like we need something that is dynamic, right?
Hmm.
We know it's going to need to change. And I think that's the hard part. Everybody gets to that point in the discussion where they know that their average will need to adapt. They just don't know how it's going to adapt,
Right.
right? It's like when someone says, well, I know relationships need to grow and change, but I don't really know how they're supposed to grow and change, right? We're not sure of the method. And so what we find with a volume weighted average price is it handles a lot of the math and the concept very elegantly and kind of simply for us. So I
Hmm.
promise you guys, it's way too early to be going into equations and like how a VWAP works. But conceptually, it's very similar to a weighted grade point average. So if you've ever thought about your grades in high school, grades at college, or even any weighted average, if you're a fan of a sports team, you may have done something like this. A weighted average, two quick things about this. One, it's weighted. So it is dynamic in that it applies more emphasis during some parts of the calculation. An example for a VWAP would be it applies more emphasis to the calc when we have periods of higher volume. That's kind of intuitive. That makes sense. We all
Sure.
recognize that larger volume is more likely to move the market. So
Hmm.
back in the grade point average analogy, the second key thing is that it is a cumulative average and not a moving or rolling average. So you might, think back. If you ever had a teacher or professor tell you, well, your grades are just the last three assignments you've turned in, right? It's whatever your most recent test scores are. That's the equivalent of a rolling or moving or recent average. It's really responsive and focused on what's happening now, but it's not doing a good job of holistically telling you how your grades have been for the last semester. And so a VWAP, kind of to contrast with a moving average, a VWAP does a really good job of telling you how the whole day's average price has evolved, whereas a moving average really is designed for and focused on short-term responsiveness. When does something change? When is it moving just a little bit without any of the context that VWAP provides? So
Well, and
go ahead.
volume
Yeah.
is so important too. Volume, we know as traders, volume is one of the few indicators, if you will, that is a true indicator. It's not mathematically based. It is what it is.
That's a great way of saying it because people have to vote with their wallets. And I often refer to, it's kind of a weird phrase, guys, but the capitalist democracy of the markets, because it's not one vote per trader,
Hmm.
it's one vote per share. And so some people get a lot more votes than you or me or Eric or one of us, right? There are some people with thousands of votes compared to our, 3, 5 contracts, maybe.
Yeah.
So uh, I think we all accept that at a base level. We maybe don't acknowledge it or say it out loud that we know the big traders really move the market.
Right.
So why don't our tools reflect that? Like, why don't our, the utilities we're going to benchmark the market with, we're going to compare the market to these things. Why don't we account for the fact that bigger traders matter more? It's not that we don't matter, it's that they proportionally matter a lot more in determining where the market is headed. And honestly, thinking years back, when I came to that concept that, oh, VWAP changes to affect, or to, excuse me, to reflect where areas of higher volume mattered more, so to speak, that stuck with me. When I learned that it was a cumulative equation that went through the entire day to reflect how the entire day had sort of transpired, that stuck with me. So I just want to point out, these aren't like mathematical epiphanies I had. These are moments of familiarity and accessibility. I felt like I could get my head around this story, and I understood why someone might use a VWAP. It was kind of solving the things that I was looking for and had been frustrated with moving averages. So I want to be really clear. I'm not just talking smack about moving averages. They have their place in technical analysis. And I'll tell you another thing. They are way better than VWAP in terms of responsiveness. They are way faster at giving you a signal. And of course, the trade-off being kind of like the boy who cried wolf. He'll give you a lot of signals too, but half of those signals are because he saw a big gray dog, not a wolf.
Hmm.
You see what I mean? So anyway, forgive the long-winded rant on VWAP. I think that's why you said I am Mr. VWAP, because no one else out there can speak as in as animated and zealous fashion as I do.
Yeah, that's true. I'm
I
sure
feel
everybody
like
kind of
I sound like I'm a lobbyist for VWAP or something, but no, I really I do have a website called the VWAP, but that's as affiliated as I am. It is genuinely just something that that means a great deal to me from my own personal trading experience. Oh, just a moment ago, I thought of a joke. Had I only been smart enough to say, "Oh, I'm captured by big volume," kind of lobbying joke there, very dorky. Sorry, I know because we're talking big volume, right? You got it, Eric. The other like 100 people just groaned. I could hear them silently groan in unison.
So
Anyway.
tell us what we're looking at on your charts. I'm assuming the VWAP is a line in the middle, and if the market is trading above the VWAP, it's going to have a tendency to be bullish. If it's trading below, it's going to have a tendency to be bearish.
So I would agree with the first part of what you said, and I would augment a little bit of the second part of what you said. So let's just annotate very clearly. What we have here in the center is, as Eric described, the volume weighted average price. What we're measuring in terms of distance away from that would be standard deviations. And we'll talk about what that is in a second for anybody who's unfamiliar with that term, standard deviations. I assume people have probably heard it before or heard it in passing. It's something that's used in Bollinger Bands and a number of other pieces of technical analysis. But what we're measuring here is one standard deviation above volume weighted average price and one standard deviation below volume weighted average price. Obviously, further extended, we've got the 2 and -2 standard deviations. So we're effectively measuring not only where the benchmark is, that's VWAP, but how far above or how far below we are at any point. And so we'll talk a little more about how that helps me determine whether the market is likely to continue or likely to reverse. So kind of to Eric's second point there about what are we supposed to interpret? Should we maybe assume that the market is likely to continue going down when we get below VWAP and likely to continue above when we're above VWAP? I would definitely agree with that during certain circumstances. I'm cautious because, and I want everyone to hear this loud and clear, here is the main point that people, main mistake, let's say, that traders make when they're first encountering a VWAP. And I'm not saying Eric made this, just to be clear. I mean, again, this is just what most traders, I think, observe when they look at a VWAP. They'll assume that we're going to be moving, let's say, always back towards VWAP or always away from VWAP. And I tell traders that sounds like you're kind of trying to fit the idea of magnetism to a VWAP. The example being when we're, let's say, below VWAP, the magnet pushes us away. And when we're above VWAP, the magnet pushes us away. And of course, we could say the exact opposite. Maybe the magnet attracts us back to VWAP, or the magnet attracts us back to VWAP. That's the challenge with volume weighted average price. We have to determine whether the magnet is attracting us or repelling us. And when I kind of years ago, I remember observing, because I had played the same way Eric had just described. I had traded always in the direction that we were moving at that moment, kind of with VWAP as my with trend guide. I noticed there were times that my expectations of a breakout would be kind of stymied. I'd expect the magnet would be repelling us, that we'd be trending in a direction. And then we'd end up being strongly attracted back to VWAP, and vice versa. There were other times that I'd say, this is going nowhere, total chop day. And then out of nowhere, I'd say, what is that candle? Why are you breaking out? Basically, what I'm saying here is VWAP isn't a single interpretation tool. There are two main ways to interpret this, either a market attracting or a market repelling VWAP. And it's a little complicated to hear, there's two ways to interpret this thing. But if there's only two ways to interpret it, it's like looking outside and having to determine if it's night or day. Who knows? How do we determine? Oh, wait, it's night and day. I think I got that, right? There's two, it's kind of a binary outcome of are we in a trend or a non-trend environment? And that'll determine our expectations for the future. Are we trying to trade back towards VWAP as I've drawn here on the chart? Or are we trying to trade further away from VWAP? So sorry, I know that was like a loaded answer to what seemed like a really straightforward question, so I apologize. But we'll talk obviously more about how to determine that in the next couple of minutes too. Sorry, go ahead.
It's a great explanation, because I think sometimes we come to trading with this misconception that it's got to be super simple, and trading is complicated. There's lots going on in trading.
That is absolutely right. I'm zooming out just briefly so I can get a little more context. And what I'm specifically looking here for, this is perfect. I actually found a couple examples from the last several days using just NQ. And to tell you guys very clearly, I'm on a 5-day, 5-minute chart. So I'm just looking at the most recent couple trading days, last trading week or so on NQ. But Eric, you said it very well. It's not so simple. If it was, would we be talking to traders? Like, I don't think so. We'd have a PDF that would be $50 and it would list out the rules, what you need to do, and that would be it. It would be the end-all document on trading. Nobody would ever have to speak to another person about it. So obviously it's more complicated than that. It's a little more art than that. So why I zoomed out for just a moment here, I'll pick a different color too, since we're on a different time frame. Notice that there are dramatic differences in the chart between areas like what I'm circling right now. I'll draw another couple of these to draw your attention to them. Actually, there's a small section here as well. These are relatively range-bound, tame sections of chop or consolidation, kind of digestion of the move. And if we're going to contrast that, let's pick a different color still, with something like the blue boxes or squares I'm sort of drawing. Look at these portions of strong trend. So the reason I'm drawing this distinction is because here's a critical VWAP trading tip for you guys. When we oscillate on both sides of the VWAP, so an example would be like these kind of pink circles I've drawn. Notice when we're crossing both sides of the VWAP, that represents great indecision about a market. And to Eric's point from just a moment ago that I was trying to like take a second and splice, what he was saying was when we strongly kind of stay on one side of the VWAP, that in and of itself is a signal too, isn't it? And absolutely, as evidenced by these kind of blue boxes I've drawn, which are highlighting obviously areas of strong trend. So another way to look at this, fitting this to my analogy of magnets from a minute ago, every time you see blue, picture the magnet repelling us. Every time you see pink here, just what I've drawn on the screen, of course, that's the magnet attracting us, kind of holding us in place and being unwilling to let us move away from the average. Think about how I'm phrasing that, by the way. That's a little different, right? Away from the average is not something most people say because most people don't have a single average that they're talking about. It's a couple different averages or maybe different time frames or different
Hmm.
reference points, right?
Hmm.
Having a single benchmark allows me to kind of frame the markets in a sense of, are they going closer towards the thing I've traded a million times, this average for the day, or are they moving away from it in one direction or the other? Because away from it, that little phrase, that means a trend. Like I want everyone to take just a moment and examine in their own mind, moving away from an average. Like what does that really mean? Picture a chart that would qualify for that in your own mind. And then picture, is that kind of what you think of as a breakout or a trend? I mean, even at a very small scale, probably. What even really is a trend other than movement away from where a stock has been and kind of towards a new area in short term? I'm not talking about an absolute all-time high breakout. I'm just talking about trading to a new short-term range, right? We as traders are looking for opportunities of either consolidation to trade that way or trend to trade that way.
Hmm.
And sorry, I'm catch myself droning on. I look down at the clock and I'm like, Zach, you've been rambling for 10 minutes. Let Eric speak. So please feel free to jump in
No,
too if you have
no,
questions. Yeah.
it's true because there really are just the two market environments, right?
Mm-hmm.
And it's important. We've discussed this in the trading room as well. I'll mention to people. I think your most important task as a trader is determining whether the market is trending.
Mm-hmm.
Usually, if it is trending, it's fairly obvious whether it's trending higher or lower.
Mm-hmm.
And if it's not trending, to recognize that as well, because it's those periods of time when the market's not trending, which
Mm-hmm.
statistically works out to be about three quarters, certainly two-thirds to three-quarters of the time, that potentially costs you a lot of money
Mm-hmm.
if you get on the wrong side of that trade, right?
Mm-hmm.
So it's I think it's very important that you're able to discern the difference between the two and know how to treat each one accordingly.
You said a great thing there with I try and frame it in not I'm trying to remember in the order I said it because I was hearing what you just said. Market direction, long short, market type, trend or counter trend, and
Hmm.
market strength, meaning is it likely to continue or likely to reverse? And so think about any market. Let's say we don't even know the trade we're taking, but we know it's likely to continue or we know it's likely to reverse or change direction. That bit of characteristic is very, very helpful because that lets you know, well, what are my expectations? Should it be, should they be very short term? Should it be more medium term? Do I feel safe in this trade? Is it predictable and consistent? Or is it violent and volatile? And so another key point for traders, managing expectations. I cannot tell you how often I deal with a trader who gets tripped up in some, terrible position for 2 or 3 days. I say, where did this all start? And they said, well, I thought it was going to be a small trade. And then when it went against me, I wanted to hold it to recover that money. And then I doubled down, and it's a kind of common story. It all starts with one small misstep and the, let's say, rampant desire to get rid of or erase that minor mistake rather than accepting it too. By the way, I just got to zoom back in. I'm sorry, I'm kind of clicking back in on the chart here, but let's zoom back in on a 1 minute because we actually just had a really neat VWAP rejection on the NQ. So let's zoom in on just today's trading. So from midnight onwards, and we peaked our head above at about 9:45, 9:50. But notice we spent bare minutes above the VWAP. So imagine, for example, guys, this is a market that has sold off just an inch under the overnight lows. So it tested and made a new low. People came back up to average price to sort of examine, if you will, to explore. Hey, what do you guys think? Should we be trading at average, above average, or far below average? And the answer, unfortunately for the NQ, was further back below average. People were unwilling to pay above the average price that people have traded these NQ contracts at overnight so far. And we haven't broken yet still to a new lower low, so we're not, continuing in traditional trend sort of definition lower just yet. But I gotta tell you guys, ooh, 4 or 5 minutes above VWAP and then immediately back under, not particularly encouraging. So not necessarily a trade I'd take at this stage, just simply because we've moved so far away from VWAP already. However, this sort of establishes an area of resistance and also gets us turned or tilted downward. So another key principle I'm going to take a moment here to talk about is inertia. VWAP, because it's a cumulative average. Let's go back to our GPA analogy. We have all experienced the inertia of our grades. If you guys are anything like me, if your grades weren't, let's say, superb in your freshman year, and you sought to improve them over the rest of your time, let's say at university, you start to realize, oh, wait a minute, it's really hard to change a cumulative average after a certain amount of time if it's really tilted or moving in one direction. It's going to take a lot of new data points, meaning I'm going to have to go get a lot of good grades in order to change what had already kind of established itself as, I should clarify, I'm not talking like I had poor grades or something. I think I graduated with a 3.6, just for reference. But everybody seeks to change or improve their average over time, and everybody runs into that frustration of the math of like, oh, if only earlier in the day, so to speak, meaning if we were a market, we were trading over the course of one day, we would say earlier in the day, wherever the average is moving, that's going to kind of tilt or decide the bias for the day. So notice we're now operating in a market that has already tried to get above its average price early in the morning, quickly and aggressively rejected, still on fairly high volume. And now, so here we're going into the deviation band discussion briefly, but notice we've also crossed this one deviation band to the downside, which is kind of like a dynamic measurement of, is the market likely to revert back to VWAP, or is the market likely to continue? The fact that we've made it further than the one deviation away from VWAP indicates to me that people are comfortable trading this at a, I almost said a significant premium, but it's the exact opposite. It's not a premium. A premium would be up here, almost like a supreme discount to the market's average price. People are uncertain, almost certainly, about the trade concerns that have occurred over the last 24 hours. And so that's why we're seeing, I think, a lot of pressure on this market, unsurprisingly.
Mm-hmm. Yeah, so in that respect, you're kind of following the market in a similar fashion to Bollinger's, right? Because Bollinger, he was always big on standard deviations, and if the market was overextended one way or the other, he would be looking either for the market to reject the extension or just go all out and go with the new direction.
So you brought up a really good point too about the Bollingers and the, let's say, similar conceptual design. And here's where the difference would be between Bollingers and VWAP bands. The similarities, and you're spot on, the similarities are pretty high. They look similar, they're designed for the same thing, which is having a central reference point and a measurement of distance away from that. Because think about it, if we didn't have a central reference point, we could never draw a set of bands around it because we wouldn't know where to plot the bands. The difference with Bollinger Bands are that they are much more short-term because they're focused on a 20-bar moving average. And I'm just kind of hand drawing a moving average in there. But the point being that they're going to be much more responsive. So the conceptual thing we're talking about here, you guys have heard me say this a few times just in half an hour. Periodic averages which are really responsive, and cumulative averages, which are less responsive, but a little more believable or credible. Bollinger Bands use a periodic average, and therefore they're going to be very responsive. But the downside, problem with Bollinger Bands, they may not be as credible as VWAP. It's less, it's going to be, VWAP will be slower moving, but maybe more credible. So let's actually, you know what, here's what we'll do. Rather than me draw these in, I realize I got this trading platform. How about I just load up some Bollinger Bands and we'll see them laid on top of one another. You know what I'm going to do? Bear with me 1 second. I'm actually going to use, let me see if I'm going to use this. I'll go basic VWAP. Bear with me, guys. What I'm looking for, you can see I've got a few VWAP studies in my
Just a
library
few,
here.
yeah.
Just a few, just one or two, two extras. And what I'm doing now is I'm turning off my custom VWAP. And here we go. So what we're able to see, and forgive the similarities of color where they overlap, we've got our volume weighted average price and our 2 deviation and -2 deviation band still plotted over the chart. However, we've also got our set of Bollinger Bands plotted in much more microscopic form. Microscopic is not the right word, but a smaller scale, obviously, is what I'm trying to refer to. A Bollinger Band set will give you much more short-term signals for trading. But like the boy who cried wolf, do you really want 50 signals a day if an unknown order of 25 of them are going to be not correct or not helpful? And I want to be clear too, nothing is nefarious about this. I'm not trying to say Bollingers are bad or you can't use this or you can't trade this way. Anybody who tells you you can't trade a certain way, what they mean is they can't trade that certain way. I'm
Yeah,
dead
that's
serious.
about it. Yeah.
I'm an example of that too, because I'll be like, oh, I don't touch Forex. You know why? Because I don't know how to trade Forex. I'm not a good Forex trader. And another mark of a quality trader is somebody who is proud of what they're bad at because they've figured out what they're bad at and they stay away from it. I don't trade earnings. You know why? You can probably figure this out. It's because I'm bad at trading earnings. What I'm really good at is intraday equities and futures, right? I trade technical patterns, reliable patterns that I find over and over. And I found that consistency to be really rewarding for me. And I know consistency, everybody's seeking that. I mean the consistency of what I tasked myself with. I didn't like jumping from earnings move to new rumor to new crazy thing. I got to tell you, I really do respect that you're trading, predominantly futures, and you're away from the kind of hot small caps that everybody seems to push, right? Because it's
Mhm.
exciting and it grabs your attention. I don't think that really teaches better trading. I don't think that instills better trading habits in the people who encounter it. And so I've tried to stay away from it as well. I've also personally never found a ton of success with it. Where I've found any consistency, where I found what pays my bills, large cap equities, futures, indices, traditional price patterns, and volume weighted average price. But obviously everyone's experience is different. And if you are profitable using, let's say, lunar cycle trading or something kind of out there, more
Yeah, the
power
good
to
old
you.
lunar cycle,
I
yes.
know. It's just obviously it's going to be pretty rare. I've never met someone, and I've met thousands of traders. I've still not met a profitable lunar cycle trader, but that's okay. Do you guys ever watch equities just out of curiosity? Is that something you explore, or is it just mostly futures?
Well, it's funny how you were just talking about you trade what you know. I cut my
Hmm.
teeth on the futures market, so that's always been my go-to. I've always been a futures trader, and occasionally I'll look at the forex. And I've got a few friends who are interested in penny stocks, and so they're always hounding me. Hey, Eric, what do you think of this one? What do you think of that one? But
Sure.
yeah, I'll look at whatever people in the room request, but unless people are asking for markets, uh, we tend to focus on a futures market because that's just what I do. But feel free to show some of the markets that you're following. Like I said, it's Rabbit Hole Friday. We're here to
Sure.
mess with people's minds.
Oh,
So
of course, of course. Well, I can tell you guys too, not to go the other direction and force us further down the futures rabbit hole, but I will tell you guys one weird story about me in futures. So I know they just announced recently these micro ES contracts,
Hmm.
and what an interesting idea, because on one hand, it's great to allow people who don't have the margin for a large contract or through another broker that's giving you worse margin. I bet you Ninja has way better margin than the broker I use, just to be honest. But if you're, if you wanted to take, what is it, $200, $300 margin, how much leash they give you, it's a very small amount, I
I
remember.
think
But
it's even less than that, Zach.
yeah, it's extraordinarily flexible. I remember the days where, and this takes, oh my God, this takes me back. I have not traded, especially Forex futures in many years. So this must have been 2011 or 2012 that this story is from. Okay. Um, and I know you guys can't see me. I'm raising my right hand. I swear and affirm that this is true. Okay. I'm not making this up. One night between midnight and 6 a.m. Eastern. So this is back when I was staying up all night trading the European session. I would switch between the E-mini and gold and crude and the 6E, which is the euro dollar Forex futures. So I've never traded spot Forex, but I've traded a lot of dollar denominated futures in my day. So I traded, Canadian, Australian, yen, Swiss franc, all that was available. I think 6S, 6A, 6E, 6C, all the little dollar denominated futures. So I started looking for more flexible ways of trading those contracts because they were moving pretty aggressively for little old 25-year-old, just figuring his trading out Zach back in the day. And I remember coming across a half-sized, I think it was half-sized, or maybe it was a tenth of a size, but it was a smaller format of the 6E. And it
Yeah,
was
the
called,
micro.
yeah, E7, I think it is. I
Yeah,
don't know if
that's
it's
the
still
one.
around.
It
Okay,
is.
you're familiar with what I'm talking about.
Hmm.
So I remember positioning in 6E and using some E7 to hedge, and then I like moved out of all the 6E and converted it into E7. I just had a bigger position. Why not just stay in that anyway? And by the end of the night, so in that 12 a.m. to 6 a.m. or midnight to 6 a.m. session, I remember I calculated that I personally was 12.8% of the volume in that contract. So just I
That's
want
pretty
everyone to think.
impressive. Yeah.
Yeah. Now, just to be clear, that's not a bragging thing because we're talking tiny dollars. What that should
Yeah, of
show you
course.
guys is how terrifying a situation that was. What was I doing trading in that realm? What was I doing trading that kind of size? And the answer was I was a novice. I was an idiot. I didn't understand liquidity and I didn't really appreciate the limitations of trading in that environment, like why it wasn't so easy that I could just go find a contract that gives me the speed I was looking for. That's not how futures work. Futures is like it's like when you're at a roller coaster and it says you must be this tall to ride the ride. It's like, hey, if this margin doesn't work for you, get out of line because you don't belong here. Nice breakdown on the NQ here as well. So strong trend. I just got to call this out as it's happening, obviously. Look at the slope of VWAP tilting downward more aggressively as well. That shows you that this is going to be even harder to recover from as we go into the end of the week, kind of into the weekend. We're going to have a strong tilting downward VWAP. Remember I mentioned a few minutes back, guys, that inertia, like a boulder rolling downhill. The best we can hope for is the boulder rolls to a stop, right? It's going to flatten out. Not a ton of hope for like a snapback V-shaped recovery in the mix here. Now I should clarify too. Obviously, I'm not giving trading advice here. I'm not making a specific recommendation, but I would caution you. Another mistake that I see quite frequently: traders get outside of, let's say, the 2 deviation band, what we're pressing right now, and they say, "Man, that looks like we're at an extreme. What if it reverses here?" Trust me, it probably will for a second at least. But that doesn't mean it's a material reversal or a tradable reversal or a safe reversal. Certainly not a defined reversal. So I don't want everyone to get starry eyes as this starts spiking back up towards the middle of the chart. That is likely temporary. And I got to be honest, this looks pretty scary to the downside. So I don't even know if we're going to get a ton of a bounce. I'll move it out a little bit so we have some space here. Notice as
Well,
well, man, we picked a
it,
great day for this. Go
it
ahead,
goes
Eric.
back.
Take it away. Yeah.
Yeah, it goes back to the whole idea of trend. discerning trend. So, we have a downtrend today, so we should focus on staying with the trend. Now, to that end, do you prefer to enter on a pullback, or do you
Mhm.
just, if you think the market is in free fall, do you just get on board as quick as you can?
You raise another great point. So because we had a defined level of support here that was violated, I would have taken, let's say, a breakdown trade rather than simply waiting for a retest. However, typically, great instinct there, Eric. I would be waiting for a market to come up to this declining one deviation band, and then I would clobber it for a resell back to the downside. So let me just draw in kind of what I'm hypothesizing here. Somewhere up in the 75.25, 75.30, somewhere like there, because I can imagine this declining deviation band acting as really aggressive resistance. And I don't know how long we plan on continuing, but we might actually be around to see that whole reversal and test of the dev band play out. If not, guys, you can likely pull this up on your own charts. I'm only encouraging that because this isn't, hey, you got to come to my website to see it, or hey, you got to ask Eric. Relax. VWAP is an idea, and it's something you can certainly check into for yourself. It's not a proprietary indicator, though I do get a lot of people who say, Zach, did you really invent VWAP? I said, no, I'd be way richer if I invented VWAP. Sorry, guys. So,
You're just Mr. VWAP.
you
Let's not get
know,
carried away, folks.
exactly. No, you know what I tell people? Think about the guy who invented fire. He didn't invent fire. He like walked by a bush that was on fire and was like, whoa, this is
Hmm.
useful. I feel like that guy. I may not have come up with it, but I'm really trying to get more and more people to see it solves kind of what you're looking for from moving averages. Okay, here we go. It's a moving average that behaves the way you want it to. It looks the way you want it to, and it behaves the way you want it to.
I like it. That's
You know?
clever. Yeah, I was taught early on. That doesn't mean it took,
Mhm.
but I knew early on that if you're going to make money in trading, you have to learn how to trade a pullback because, well, they're much more predictable regarding market timing. To get in on a pullback rather than try to trade a breakout. I share
Oh,
in the people in the trading room all the time.
yes.
Trading, a friend of mine always used to say, because I was a big time breakout trader, he said, Eric,
Mhm.
you can never trust a breakout. And
Mhm.
so through him, I learned to trade the pullbacks.
Well, and I mean, to that exact point, let me connect this to VWAP. Look at how frequently there are these tiny breakages through VWAP. And I know a lot of people say, well, doesn't that kind of indicate that VWAP is untrustworthy? During a flat VWAP environment, yeah, VWAP is not exactly a pristine area of support or resistance, something to be trusted. Breakouts, not exactly trustworthy when the VWAP is unsloping. But as we build into a strong trend, guys, that's where the VWAP really shines in terms of a definition of trend, a kind of constant area we'll retreat to, but unlikely to really surpass. And so to your point of you need to learn to trade a pullback, here, let me change colors. This will be a little easier to see. But as the market pulls back, what we need to be able to do is structure a trade such that we know where our risk is. Here, actually, you know where we should be taking the trade is with a little bit of confirmation where we've had it come back to the defined support area, maybe a rising volume weighted average price. We've observed price move up and away from the defined support. That's giving us a bit of confirmation. Pardon me. And then as pardon me again. And then as we rise up very lightly, we can structure our trade against an area of implicit support where if violated, we'd know not only is our pain tolerance surpassed, meaning it's too much risk, but also our thesis on the chart is invalidated. And that's a really critical point that we're not just dealing with when does the market wobble too much for you or me or Eric, but when does the market wobble too much for the chart to make sense? And you realize that those are two different concerns. One has to do with how you interact with the market, and how you make or lose money. And the other, the chart related thing, that doesn't know anything about you and it doesn't care. The chart is what we really need to pay attention to. And of course, it must align with our risk metrics. But I always tell traders, if you focus on what the chart and your thesis require, and then determine how much money you're willing to risk, you're going to be a great trader. However, if you obsess over how much money you're going to make and then try and find a chart that'll give that to you, you will go crazy. You literally will. You will drive yourself nuts.
Yeah, good advice. Very good advice.
I know kind of a scary thing to say on a Friday. It's like, no, Zach, give me some like uplifting stuff. Don't tell me this. Actually, I will. Here, I'll give you another interesting principle. Good medicine tastes bad. What that means is the stuff that will help you, probably not pleasant to hear, right?
No, that's true. That's so true.
Yeah, it's like they don't taste like Skittles because Skittles are Skittles. You know what medicine is? It's really designed to fight whatever's in your body. It's making you sick. So like it's not trying to taste like the rainbow, my friend. It's just there to be medicine. So
That's
whenever you hear me say something unpleasant, you go, Zach, you're probably right. I don't like it.
Yeah, don't want to hear it, man.
Yeah, Adam has groaned when listening to me give my spiel once or twice in the past. Yes.
I bet. So tell us a little bit more. You said you're an equities trader,
Mhm.
and I know you're working on a bit of a stock screener, because that's always the tough part with equities. Trying to find which stock to follow, because how many
Mhm.
equities are there now? It's just a huge market. I suppose that's one reason I've always gravitated toward the indices as well. They kind of clump everything together for me rather than me sift through all the different equity markets. But there's great opportunities to be had in equities.
Mm-hmm. The beauty of equities is that you can go find the pattern you want to trade because there are so many opportunities. So maybe the benefit of futures, as you just described, you know what you're dealing with. It's not going to be yanked in one direction by some weird rumor or a CFO leaving or a tweet for the most part. It tends to be a little more predictable, reliable, standard, and also really liquid and tradable. So I feel you on the indices. I do the same thing for the same reason. However, being a pattern specific guy, if my job is to trade that pattern wherever it exists, and you said it very well, I need some technology that will direct my attention over and over and over to the right chart at the right time. I literally need something that's going to give me a fighting freaking chance at seeing the right chart when it matters. Otherwise, I'm literally just going to look at the charts at the end of the day and feel guilty, right? I feel like, oh, I could have had that, I missed that. So yes, simple way to think about this, and this does apply to everyone listening as well. I'm working on an equities-based scanner that is genericizable. So kind of a weird word, but able to be applied to any trading strategy. So it's going to be a very tailored or custom geared scanner. It's not meant to be a big, broad filter to show you a million candidates for trade. It's designed to bring to your attention the exact trade setups that you're looking for. So I personally designed it around my own trading setups with VWAP because I was really sick of manually looking at hundreds or thousands of charts every day just to find examples of my trades. I wanted an ordered, recorded, automatic list in milliseconds, like within real time, right? I didn't need it to be literally maybe milliseconds, but I wanted it to be pretty fast, maybe within a second. How about that? And I found a piece of technology that over the last couple of years in working with my team, also I will brag about this too, my team is entirely 100% comprised, so there are 6 people, so don't worry, it's not a giant team, but 6 former VWAP students of mine. So all traders, all of whom have learned from me, all of whom are VWAP and technology sort of focused. They understand the value of what we're creating and sort of how we're trying to gear this. And of course, as it relates to indicator warehouse, that's what I was saying about it's genericizable. We can apply this to any system or any strategy that we're seeking. So as you guys do right now, the beauty is that you can focus on one of maybe 5 to 10 ultra liquid, heavily traded, futures or index names, gold, crude, uh, either the currency futures I was referring to, and obviously the four main index ETF, or I almost said ETFs because I'm still in equities land, the index futures product, obviously. But for me, you're asking about this, there are 10,000 plus equities. Although I will tell you guys, I'm really looking at about 700 because I'm looking at the most liquid names within the equities universe. So like the S&P 500, the Nasdaq 100, maybe about 50 other ETFs. That's about my universe. So definitely not the full 10,000. Although if you've ever tried to look at more than a couple charts, you know that even 20 charts kind of feels like 1,000. You're juggling
Mm-hmm.
so much that you need the technology to keep apprised of, what's headed and where is it headed and what's going on, right?
Yeah. All right. Well, Zach, it's been a pleasure. Thank you so much for taking the time and going over the VWAP and telling us a little bit more about it. Now, you mentioned your website, so feel free to do a little shameless self promotion here.
Certainly. Well, I'll tell you guys this. I do not market. I literally don't market. So if you go sign up for our email list or something, all it is there's a free PDF guide coming out on kind of how to use VWAP, what are the basics of VWAP. We're getting ready to put that out this summer. So if you guys are interested, my website is the VWAP, THEVWAP.com. And if you guys have any questions, like I said, feel free to reach out to Eric directly. Put maybe Zach or that weird VWAP guy in the subject line, and he'll obviously pass it along to me. Or if you want to reach out directly, Zach at the VWAP.com. And I promise I'm not annoyed. I would not give out my email. I would not say, ask me questions if I was annoyed. Okay. I really do enjoy talking to traders. I will tell you that's how Eric and I bonded when we met recently. I could immediately tell Eric is genuine and has traders' best interest at heart. And that is extraordinarily rare in this business. So that's why I'm thrilled to come talk to you guys, and always a pleasure, Eric. I'll come join you guys anytime. It's fun.
Yeah, well, thanks, Zach. That's very nice of you to say.
Mhm.
All right, everyone. Well, it is Friday, and the market's kind of made its move. I think we kind of saw the move du jour, and it's probably going to spend the remainder of the session consolidating a little bit. But like I said, it's Friday. Why don't we make it an early weekend? And I will see you all again on Monday. Thanks again, Zach, for your time, and I hope everyone has a great weekend. I'll talk to you on Monday. We'll see
My
you then.
pleasure. Hey,
All
thanks
right.
again, Eric. Thanks again, everyone. Have a great
All right.
weekend.
Bye for now.